Welcome to the March 1st, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, president of McGowan Group Asset Management, a team of 9, the team that cares with advanced skills to be the best financial services team that we can be on a daily basis. Come see us or Zoom us. You can find us at the website networthradio.com. Dow Jones Industrial Average, that begins our report, the fast-paced tour of the global financial markets designed to increase your education and improve your decisions as an investor. Well, the Dow, the reason we did year to date, look at this, goes to 32,000 midweek and boom, wilts back below 31,000. What was the cause of the Dow wilting? Well, there are a couple of things we're going to cover in the charts ahead that show you why the S&P and the Dow collapsed back to about a 1 or a 2% return so far this year. This is the interest rates. And what you see here is the 30-year Treasury going from 1.65 to 2.3, a substantial increase in the long Treasury rates. Cash rates are zero because the Fed dictates that pretty much with the Fed funds rate. But look at the mortgage rate basis. The 10-year U.S. Treasury goes from 0.9 to 1.5. That's a pretty significant increase, especially from the 0.5% low last year. That's a 1% increase in the 10-year Treasury. What does that mean for the price? Well, a 20-year Treasury is down 11% so far this year with a yield not much over 2. The traditional fixed income strategies are not working in the current environment. The high yield strategy, well, high yield bonds are about a break even for the year, even though the rates spiked. That's one of the clues that you could jot down. Now, we look at this. This is one of the reasons as well. Look at what happened with oil this year. A low of 47, it topped 63, almost hit 64 this week. The super cycle in oil appears to have begun, and it looks like with the recovery in the economy, you could see a cycle where there's a shortage of traditional fossil fuels despite the rhetoric on renewables, which are on their way from 20% of power generation to 40%. Right now, natural gas makes up the largest chunk of electricity generation, and we learned last week how important electricity can be. All right, how are the sectors doing as a result in the S&P 500? Energy, the number one sector with a 31% total return year to date. The pipelines are a total return of about 15%. Financials 12, communications 10, real estate a surprising 9.8 despite the downsizing in office and the issues with multifamily and the eviction moratorium. Consumer discretionary 6%, durable goods orders way up, people buying washing machines and refrigerators for the brand new house. Information technology wilts to a 2. Healthcare, consumer staples, and utilities actually now down for the year, utilities being the worst. But energy leading the charge for the S&P with distance nearly double any other major sector. Well, let's have some fun with this. What is this? Electric vehicles were in the news. Now, of course, the leader in the electric vehicles is Tesla. They wilted to a negative return for the year, down about 4% for the year. What's happening? Competition. You've got Lucid Motors, this is the green one. Churchill Capital is the SPAC that took over Lucid Motors. And they don't have any cars yet, but they say they will shortly. And that's true for Nikola as well. And you could see those under pressure really since the end of January for the major component, Churchill Capital, the major performer. They went as high as a 480% gain for the year, now 199, so that's been chopped in half. So the electric vehicle companies, most of which don't make money except Tesla, that's a key component to this because the overvaluations that we cited, well, those overvaluations are now coming back down And with Tesla actually below where it entered the S&P, it's beginning to drag the NASDAQ as a result of this and other factors like Apple and Amazon being down for the year. The NASDAQ is just a break even, slightly less at the end of the week. So you've shifted from growth stocks that were overpriced by any rational measure to value stocks. Where do we get a dividend, and where are the earnings multiples realistic? Healthcare and energy being two of those sectors. And for the fixed income choices, the high yield and floating rates appear to be the most attractive at this point. Please go to networthradio.com for the extended broadcast. Don't forget to download the Apple podcast of the extended program with Alex and I, because we go into deep discussions, the headlines of the week, and it's easy and commercial free right there on your phone. Thanks for subscribing to YouTube as well. We'll be back next week with the best in financial news. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.